You see it at the pump, you see it at the food cost, and the second time is the roll-off. The roll-off is $47.5 trillion out of the $9 trillion.
Good morning, I'm Brian Sponheimer, Portfolio Manager and Auto Analyst at Gabelli Funds, and I'm going to talk today about auto sales. Automakers released sales for the month of May, which came in a little bit better than expected at a seasonally adjusted annual rate, or SAAR, of 15.2 million. Now this compares to just under 13 million a year ago when automakers simply just didn't have enough supply on dealer lots. So not really a comparable, but still very good when you think about higher interest rates and what cause they may be having on the broader consumer. A couple things are going on in the auto industry that are worth talking about today. One, we still see elevated used car prices, and this is important because it allows consumers to have more equity in their trade-in, so it keeps their monthly payment lower despite the increase in interest rates. Another thing that is helping automakers and helping dealers alike is that the content per vehicle, not only through price, but also the amount of features that are being sold to consumers on vehicles are still very high, so it keeps profitability at a very, very high level. Automakers, after April and May of 2020, went into a deep supply imbalance regarding the amount of vehicles that were on dealer lots, and they still haven't recovered. And so what we're also seeing is that automakers haven't had to resort to putting the $4,000 to $5,000 of incentives on vehicles to sell them like they have in the past. So we haven't seen incentives return to levels prior to 2020. What this is all doing is, despite some fluctuations in the broader consumer and the broader economy, is keeping the auto ecosystem very healthy, both for the automakers that are making the cars and the dealers that are selling them. Now, the dealers not only generate profit through selling new vehicles, but also through selling used and providing parts and services on those vehicles. So the entire ecosystem remains fairly healthy, and what it's done is allowed us to continue to look at companies within the space like AutoNation, like Penske, which are trading at very, very attractive multiples and don't necessarily have any risk of exposure, at least at this time, to vehicle electrification, as they should be participants. So very encouraging numbers on a day where jobs data came out and broader market shifts are there. But when you look at the underlying data, which we do here, it's still a very healthy market and one we're very encouraged by.